Hey everyone, and welcome back to Investing Talk podcast. Today, we're going to be looking at a company that's been kind of making some waves in the AI and drone space.
Okay.
Palladyne AI Corporation, ticker symbol PDYN, and their stock's been on a little bit of a roller coaster lately.
Yeah.
And we're here to kind of try to figure out why.
What's really interesting to me about Palladyne AI is they're hitting some pretty significant milestones, which you would think would send the stock soaring, but we're seeing these dips and spikes. That kind of suggests something else is at play here.
Yeah, let's start with the good news first. Palladyne AI is expanding their partnership with Red Cat Holdings and their subsidiary Teal Drones. And they're integrating their AI software into these Teal drones to enhance their autonomous capabilities. So we're talking about a network of drones working together, potentially really kind of revolutionizing surveillance reconnaissance.
Yeah, this partnership is a really strategic move for Palladyne AI. The integration of AI into drone tech is it's a hotbed of innovation right now. If they can really successfully tap into that market, it could open up some significant revenue streams.
Yeah, and they're not just talking the talk, they're actually walking the walk.
Sure.
Palladyne AI recently conducted their first autonomous tracking flight using their Palladyne Pilot AI software. And get this, they did it on a third-party small drone.
Oh, wow.
That means their software isn't limited to specific hardware.
This is a huge step forward. That demonstrates the versatility of their software
Yeah.
and opens up a world of possibilities. Imagine small drones that can autonomously identify and track targets. The applications in search and rescue security, even package delivery, are incredible.
And they're aiming to commercialize this tech by the end of Q1 2025. But here's where things get a little more complicated.
Okay.
Palladyne AI also released a business update and announced their CEO's contract extension. They're reporting substantial revenue growth in past quarters. And Benjamin G. Wolf, their CEO, got a new contract that signals long-term commitment.
Yeah. The interesting part of the CEO's new contract is the salary structure. It's nominal for 2025, with potential bonuses kicking in from 2026 onwards. This kind of suggests that they're banking on significant future performance.
Yeah,
But then we look at the stock, and things don't quite add up.
exactly. It recently dropped by 9.09% to $0.5070 and has been fluctuating between $0.50 and 70 cents.
Well, there's a few factors at play here. First, we can't ignore the broader market trends. The stock market's a little unpredictable right now.
Right.
Even though the S&P 500 gained 23% in 2024, investors are still a little cautious as we head into 2025.
Okay, so Palladyne AI is feeling those ripples of that uncertainty. What else is contributing to this roller coaster ride?
The other piece of the puzzle is investor reaction to Palladyne AI's recent earnings report. While there are positive developments, some financial challenges are causing concern. For example, their recent earnings revealed a substantial revenue drop of 57.81%.
Wow.
They brought in $6.15 million compared to $14.57 million the previous year. That's a significant decline.
Okay, a revenue drop that big is definitely
Yeah.
something to pay attention to. But is there anything positive we can glean from their financials?
Yes, the good news is they've maintained a pretty healthy gross profit margin of 48.2%. This basically means that for every dollar of revenue, they're keeping a good chunk after covering the direct costs of producing their goods or services. It speaks to their operational efficiency, even with the revenue challenges.
That's a good point. Operational efficiency can be a sign of a company that's managing its resources well. But let's be real, those reported losses were pretty substantial, right? How concerned should we be about that?
You're right. They reported losses of roughly $115.59 million. And that raises valid concerns about their financial health moving forward. It's likely weighing heavily on investors' minds.
So it's a fascinating situation. On one hand, we have these exciting partnerships, these technological advancements, a CEO who's clearly betting on the future. On the other hand, we have these financial challenges that are kind of raising eyebrows.
Exactly. To really understand where Palladyne AI might be headed, we need to zoom out and look at the bigger picture, the tech sector. And AI in particular are still hotbeds of investment. We're seeing companies like Microsoft pouring billions into AI infrastructure.
So Palladyne AI is playing in a high-growth area. But are they really capitalizing on the AI boom? What are the potential opportunities here? And what should investors be cautious about?
That's the question everyone's asking. Let's start with the opportunities. Those strategic partnerships, like the one with Red Cat, are key. They could unlock new revenue streams and solidify Palladyne AI's position in the drone market.
And we can't forget about market sentiment. Remember, their stock recently surged over 43% before this dip?
Yeah.
Things can change quickly in this space, which can create opportunities for short-term traders. but also raises flags for those with a long-term investment mindset.
You're spot on, and when we look at the technical aspects, the stock has a high beta of 4.27. This means it tends to be more volatile than the overall market, which can be both attractive and concerning, depending on your investment strategy.
Potentially lucrative for those who like to play the swings, but maybe not the best fit for someone seeking a more stable long-term investment.
Exactly. It's all about understanding the risks and rewards
Yeah.
and making sure they align with your investment goals.
This is already giving us a much clearer picture of Palladyne AI
Yeah.
and the forces kind of shaping their trajectory. We'll be back in part 2 of this episode in Investing Talk podcast to kind of delve a little deeper into their financial performance and explore what the future might hold. For this intriguing company.
Before we jump back into Palladyne AI, I think it's important to consider the current landscape of the artificial intelligence sector as a whole.
Yeah, you're right. Context is key.
Yeah.
What's happening in the AI world right now that could impact Palladyne AI's trajectory?
Well, the AI sector is experiencing a massive influx of investment. Major tech companies like Microsoft are pouring billions into AI infrastructure, and that's creating both opportunities and challenges for smaller players like Palladyne AI.
So it's a booming industry with a lot of competition. What makes Palladyne AI stand out from the crowd? What's their unique selling proposition?
Their laser focus on integrating AI specifically into drones, especially smaller ones, is what sets them apart. They're not trying to be everything to everyone. They're carving out a niche in a high-growth area.
That's a smart strategy, especially for a company still navigating the complexities of growth and profitability. But speaking of profitability, we talked about the revenue drop and significant losses earlier. How concerned should investors be about those financial hurdles?
That's a valid concern. The financial challenges are real, and investors are right to be cautious. However, it's important to remember that Palladyne AI is a relatively young company, operating in a rapidly evolving industry. It takes time to build a solid foundation.
So we need to give them some breathing room?
Not necessarily. While their age and the dynamic nature of the AI industry provide some context, they still need to demonstrate a clear path toward sustainable profitability. Investors want to see that their bets are paying off.
All right, so what are the key indicators that investors should be watching for to gauge whether Palladyne AI is on the right track? What should we be paying attention to?
First and foremost, the success of their strategic partnerships will be crucial. The collaboration with Red Cat Holdings is a prime example. If this partnership yields tangible results, like new contracts and increased revenue, it will signal that Palladyne AI is effectively leveraging these collaborations to drive growth.
Partnerships are definitely one piece of the puzzle.
Yeah.
What else should be on our radar?
Keep a close eye on their upcoming earnings announcements. The next one is scheduled for February 26, 2025. This will give us a much better understanding of whether they're able to reverse that revenue decline and make progress toward profitability.
Okay, so partnerships and earnings are key factors to watch. Anything else investors should be factoring into their analysis?
Absolutely. It's crucial to monitor industry trends. The AI landscape is constantly shifting, and companies that can adapt and innovate will be the ones that thrive. Palladyne AI needs to demonstrate that they're not just riding the AI wave, but actively shaping it.
They need to be innovators, not just followers. That makes sense, but it still feels like we're walking a tightrope here. There's potential, but there's also a lot of uncertainty. How do we reconcile those two seemingly contradictory elements when evaluating Palladyne AI as a potential investment?
It's all about approaching this with a balanced perspective. Acknowledge both the promising developments and the financial challenges. Don't get caught up in the hype, but don't dismiss their potential either.
So don't be overly optimistic, but don't be overly pessimistic either.
Right. Palladyne AI is what we call a high-risk, high-reward investment. It's not suitable for everyone. But for those who are comfortable with volatility and have a longer-term investment horizon, it might be worth considering.
It sounds like due diligence is crucial here.
Absolutely. Thorough research and a clear understanding of your own risk tolerance are essential before making any investment decisions.
This conversation has been incredibly insightful. We've gone beyond the surface level and really delved into the complexities of Palladyne AI, their partnerships, their financials, their position within the AI industry, and the opportunities and risks they face. It's a lot to take in, but I feel like we're getting a much clearer picture of what makes this company tick.
We've also highlighted the importance of staying informed about market trends and conducting thorough research before making any investment decisions. Knowledge is power, especially in a fast-paced industry like AI.
You're absolutely right. It's all about gathering information, weighing the pros and cons, and then making an informed decision that aligns with your individual investment goals and risk tolerance.
And remember, Investing is a journey, not a destination. There will be ups and downs. But with careful planning and a long-term perspective, you can navigate the market with confidence.
Welcome back to Investing Talk Podcast. We spent this episode unpacking Palladyne AI Corporation, ticker symbol PDYN, a company that's both pushing the boundaries of AI and drone technology, and kind of grappling with some financial headwinds. So to kind of synthesize what we've learned, what are the key takeaways for investors who might be considering Palladyne AI?
Yeah, we've covered a lot of ground, but I think it boils down to a few crucial points. First, Palladyne AI has really carved out a unique space for itself by focusing on integrating AI into drones, especially smaller ones. They're not trying to compete with the big boys in every aspect of AI. Instead, they're targeting specific industries where their technology can really shine. That focused approach can be a strength, especially for a younger company.
So they've got a clear niche. But what about execution? Are they walking the walk or just talking the talk?
That's where their strategic partnerships come into play. Collaborations like the one with Red Cat Holdings are essential for expanding their reach and generating new revenue. If those partnerships yield tangible results like new contracts, increased revenue, that's a good sign that they're on the right track.
Partnerships are important. But at the end of the day, it often comes down to the numbers. What's the financial picture looking like for Palladyne AI?
Yeah, that brings us to the third takeaway, their financial performance. The recent revenue drop and those substantial losses are definitely red flags. While their gross profit margin remains healthy, suggesting they're managing costs effectively, those losses raise concerns about their long-term sustainability.
Okay, so it sounds like a bit of a mixed bag financially. They have some strengths, but those losses are definitely something to keep an eye on. What are some specific things investors should watch for to get a sense of whether Palladyne AI is headed in the right direction?
Yeah, keep a close watch on their upcoming earnings announcements. Look for signs of revenue growth or at least a clear plan for how they're going to address the decline. Also pay attention to how their strategic partnerships are progressing. Any news about new contracts or expanded collaborations would be a positive signal.
So beyond the numbers, what broader industry trends should investors be paying attention to?
Well, the AI sector is evolving rapidly, with massive investments pouring in. Palladyne AI needs to stay ahead of the curve and demonstrate that they're not just riding the wave, but actively shaping it. Their ability to innovate and adapt to new technologies will be crucial to their long-term success.
It's a fascinating case study, isn't it? They're operating in a high-growth industry with a unique product, but they're also facing some pretty significant challenges. It sounds like the kind of investment that requires a lot of research and a clear understanding of the risks involved.
You hit the nail on the head. Palladyne AI presents a classic high-risk, high-reward scenario. They're innovative technology strategic partnerships. And position in the rapidly expanding AI sector offer significant upside potential. However, there are financial challenges. And the inherent volatility of the market can't be ignored.
So it's not for the faint of heart. Investors need to be comfortable with a certain level of risk and have a long-term perspective. So what's the bottom line here? What's your overall assessment of Palladyne AI as a potential investment?
Well, for investors who are intrigued by Palladyne AI, my advice is to proceed with caution. Do your due diligence, analyze their financials, scrutinize their partnerships, and really understand the competitive landscape of the AI and drone industries. It's not a simple buy and hold situation. This is a company that requires close monitoring and a willingness to ride out the ups and downs.
Well said. We've covered a lot of ground today, exploring both the potential and the challenges facing Palladyne AI Corporation, ticker symbol PDYN. It's a complex and dynamic company operating in a rapidly changing industry. Now it's up to you, our listeners, to decide whether Palladyne AI is the right fit for your investment portfolio.
Remember, investing is a personal journey. What works for one person might not work for another. Take the time to educate yourself, assess your risk tolerance, and make informed decisions that align with your financial goals.
Excellent advice. And that brings us to the end of this episode of Investing Talk Podcast. We hope you found this analysis of Palladyne AI insightful. If you did, please consider subscribing to our podcast, sharing it with your fellow investors, and leaving a comment with your thoughts. We always appreciate hearing from our listeners. Until next time, happy investing.